Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff at schiffradio.com. I'll be taking quite a few calls today, I guess, at 855-472-4433, 855-4SCHIFF. I've got an interesting guest coming up at 10:35. Bill Whittle, who is the founder of Declaration Entertainment. He's a Los Angeles-based screenwriter and producer who recently produced a video on YouTube that I just favorited on my YouTube site. You can also see it on the Schiff Radio site, Eat the Rich. It's getting a lot of views. It's a well-done video, so we'll have a talk with him about that video. Also, if you want to see a little bit here or see a little bit more of me later on today, I will be a guest on the Alex Jones Show, which is a show on Genesis Communication Network. It starts right when my show ends. I'll be on at 12:30 from the 12:30 to 1 o'clock time frame. So if you want to listen to that, you can listen to it on the GCN website. Then I will be a guest later on today on Freedom Watch on Fox Business. That's Judge Napolitano's show. Unfortunately, the judge is not there. Liz O'Donnell, who is another Fox anchor, is going to be hosting in the judge's place. I think we're going to be talking more about the Knott House counterfeiting terrorist charges. I think it's quite a story, and I think it's certainly going to be an interesting discussion. So if you don't have enough of me from the 2 hours, you can tune in to that show. I think today the markets are on the defensive coming out of the gate. Dow's off about 40 points. Gold and silver are down just very, very slightly. In fact, they're about to go positive. The dollar is mixed, down against a couple of currencies, continuing to see a lot of strength against the Japanese yen. I think the yen today is about the lowest it's been since the intervention about a week and a half ago. Yesterday we had quite a few commodities making new 52-week highs. A couple that I can remember, pork bellies, corn, silver, of course, made a new 31-year high. So a lot of the commodities were strong. The CRB index was very strong, almost back towards a new high. It's down a little bit today. We're right below the 362 handle. Remember, the high was around 366 before we had the most recent correction. I think that one of the reasons that the market's off to a weak start today, I think, is the rate hike again coming out of China. Last night, the Bank of China raised rates. I think the lending rates are a little over 6%. The deposit rates, the money that Chinese are paid on their deposits, increased from 3% to 3.25%. And, of course, more rate hikes are coming. But to the extent that China is trying to fight inflation with these rate hikes, it's wrong. Because what's going to happen is now that Chinese interest rates are rising, Chinese deposits are that much more attractive than dollar-denominated deposits. And in fact, to the hedge fund community, which can lever up, they can borrow cheaper than 3.25%, and they can deposit the money, buy RMB, deposit the money, and earn 3.25%. So that increases capital flows into the Chinese economy. Then, in order to keep the Chinese currency from rising, the Bank of China then has to print more RMB to buy up those dollars, and therefore they get more inflation. So rising interest rates is almost like waving a flag at a bull. It is not by itself going to stop inflation. In fact, it might simply stoke its flames. What the Bank of China needs to do, if they really want to tackle inflation, is to let their currency rise. But so far, they are showing no indications of this. So rather than being bearish for commodities, higher interest rates are actually bullish for commodities. But I know a lot of times whenever there's a rate hike, the intuitive reaction is sell interest rate sensitive or sell inflation sensitive commodities. But the people that really understand what's going on will buy any dip in commodities, in gold, in silver that might result from a rate hike in China, because that is simply going to encourage more printing of money by the Chinese, which is inflationary, which is the definition of inflation, and which puts more upward pressure on prices. I was watching last night on the Kudlow Report on CNBC, and Don Luskin was on there, who I've actually had him as a guest on the show some time ago. Maybe we'll have him on again. In fact, Don and I are going to be on a panel together next week in San Francisco. I think I'm probably going to miss maybe Tuesday and Wednesday's show. I'm making a quick trip out to San Francisco to speak at an institutional conference. It's not open to the public, so I don't think anybody who's not invited can go. But we're both going to be on the same panel, so it should be an interesting discussion, to say the least. But on the show last night with Kudlow, basically Luskin was saying that it's okay if we have more inflation now, that the Federal Reserve needs to create inflation because for the past 10 years, inflation was too low. And so we have to catch up, right? We didn't have enough inflation in the last decade, so now we need more so we can get on target to where we should be. I mean, imagine what the guy is saying. He's basically telling Americans that prices didn't rise fast enough in the last decade. So we need to make sure they rise to catch up with where they should be based on what we think inflation should have been. So I know you're struggling and you're having a hard time making ends meet, but for your own good, we're going to make that even more difficult. We're going to make sure that the cost of everything you have to buy goes up because you know what? You've been getting too good a deal. Prices haven't increased fast enough in the last decade, and so the Fed has to make sure that we catch up to where we should be. I mean, amazing that somebody theoretically as smart as Luskin could continue to make statements like this. And in fact, one of the things he said is that in order for inflation to get above trend, he said that we'd have to have an inflation rate of at least 5 or 6% to get above trend. Well, you know what, Don? We're probably going to have an inflation rate even greater than that. In fact, it's already greater than that if you keep track of inflation correctly. In fact, the only reason that inflation was lower than what Don Luskin thinks the average trend for inflation is because the government changed the methodology for computing it. So it wasn't that inflation was lower, it's just that the reported inflation rates were lower. Actual inflation was probably higher. That's one of the reasons that so many people are falling behind in the United States, because the cost of living is rising much more rapidly than their meager wage increases. But unfortunately, Don Luskin was not able to figure that out. Now, the guy that he was up against on the Kudlow show didn't really do that good a job of arguing with him. In fact, one of the other things that Luskin said is that, well, you know, when I go to the grocery store, I don't buy a bushel of wheat, I buy Wheaties. You know, as if the price of wheat doesn't have any impact on a box of Wheaties. I mean, it is a major ingredient. How can it not affect what is ultimately charged for the Wheaties? But it's not just the wheat. Wheaties are getting more expensive because the gasoline needed to transport the Wheaties to the supermarket is more expensive. The cardboard, the paper, in order to make the cartons, the containers that it's in, the plastic that is around the cereal. Everything about that box of Wheaties is more expensive. How can Don Luskin not understand that he is going to have to pay the higher cost of plastics or paper or energy or corn or fertilizer or all the things that went into putting that box of Wheaties on the shelf? Anyway, when we come back, I'm going to talk a little bit more about inflation and play some sound from Ben Bernanke. I have quite a bit of sound there. Or maybe I'll take some calls. I'm not sure what I'll do next. But anyway, don't go away. You're listening to the Peter Schiff Show on SchiffRadio.com.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. Peter Schiff here at SchiffRadio.com. You know, there's an interesting article on the Europac website today on how low interest rates are killing savers. And I've made this point many, many times. You know, the Federal Reserve is destroying savers in two ways. And this is particularly problematic for people who are retired. And, you know, I'm often, accused of, I'm an anti the elderly because I want to make cuts to Social Security. Well, I think cuts in Social Security are much better than eviscerating the savings of the elderly and paying them nothing on their bank deposits. What happens is interest rates are basically 0%. So let's say there's somebody who's 65 years old, they're retiring, they have $1 million saved up in cash. And if they could get a 5% yield in a CD, which is probably below the historical norm, that would give them $50,000 a year in income. Maybe that's enough to live on. Maybe they've got a fully paid for house, they got a little Social Security or whatever, and $50,000 a year, that's fine. They can live on that. But right now, there's 0% interest rates. So what do they have to do if they need $50,000 a year? Well, they have to dig into their principal every year. They have to spend $50,000, and their money is going down and down and down. Eventually, they're going to run out of money, and what are they going to do then? Meantime, inflation is also hurting savers because the price is going up. So maybe somebody needs $50,000 a year to live now, but because food is more expensive, energy is more expensive, maybe they need $60,000 or $70,000, which means they have to dig into their principal even faster because the Fed is creating so much inflation, yet there's no rise in the interest rates. Often in my brokerage firm, we come across people who say, look, I can't risk money. I don't want to lose any money, so stocks are too risky for me. I need to play it safe. Well, let's say if somebody feels that way and they have $1 million and they don't want to lose any money, but they need $50,000 a year. Well, if they leave it in the bank, they're guaranteed to lose money. After 4 years, they've lost 20% of their principal. So in many cases, I think they're better off taking the risk of the stock market. Let's say you buy stocks where the dividends are 5 or 6%. You can collect those dividends and your principal might actually grow. And even if the stock market goes down and it's down 20% or 30%, it can come back. You can get your money back and you're still getting your dividends. But as you spend down the principal in your checking account, you can never get that money back. It's gone for good. So this is really a war. And nobody really talks about how much suffering and pain is the consequence of low interest rates. And everybody likes to talk about the benefit of low interest rates to all the people who are borrowing money. Well, they get to borrow for less. Well, this is a zero-sum game here. There's a lender for every borrower. Now, I understand a lot of these lenders are in Europe or China or Asia, and who cares if, we screw foreigners. But a lot of the people are Americans, hardworking Americans who did the right thing, who saved their money, and now they're being asked to bail everybody out. They're having their principal, their standard of living, stolen out from under them. And, of course, a lot of these seniors end up getting involved in very risky investments in order to make up for what they're losing, and sometimes they lose money even faster. Anyway, I also wanted to mention, if you didn't know what time Freedom Watch is on Fox Business, it airs at 8 p.m. It's not a live show. I'm taping it around 5 o'clock, but it airs at 8 p.m. on Fox Business. And then if you miss it at 8 p.m., they repeat it at 11 p.m. These are Eastern times. And my guest, I was misinformed, he's not on until 11 o'clock. So let me just do a little bit, play some of the sound from Ben Bernanke from his speech yesterday about inflation. Just in case you weren't sure how clueless Ben Bernanke is, you'll know after you hear him speak. And then I'll take some calls. I think we only have a couple of callers on the line. If you want to call in, we'll take a lot of calls in the next segment. 855-4-SCHIFF, 855-4-SCHIFF. Anyway, here is cut number one from Bernanke's speech yesterday.
Walmart says that wholesale prices are going up on just about everything right now, and that the increases will work their way to the retail level by summer. Is this a valid forecast and indicator of consumer price inflation in the future?
Well, Walmart has more data than the government does, so.
So what, he just laughs it off? I mean, is that like a tantamount to admission that we should pay attention to Walmart and not the Fed? And if Walmart has more data than the Fed, and Walmart says inflation is a serious problem and prices are going to start going up across the board, why isn't he doing anything about it? Why isn't he raising interest rates right now? The fact that he can laugh that off and then even admit that Walmart has more data than the Fed and so they ought to know, that's kind of amazing. Anyway, let's continue with these cuts. Here's cut number two.
We spend a lot of time, a lot of effort monitoring inflation developments, as I'm sure you know, as every central bank does. We use a whole wide range of tools. We use, of course, government data, models and statistical analysis. We use financial market indicators. We look at commodities. We look at a whole range of things. And among the things that we look at, and that's one of the things that the Federal Reserve banks help the board and the FOMC with, is we collect anecdotal information from boards of directors and advisory councils around the country. And so that's part of the input that we get as we try to figure out what's going on the inflation front and what's going to be happening over the next few quarters.
You know, you don't have to figure anything out. He just admitted that Walmart has more information than the Fed. Walmart says prices are going up across the board for everything. What's to figure out? That'll be enough. I mean, he's saying the Fed, they're monitoring. They're spending all this time monitoring inflation. What a waste of resources. I mean, any elementary school kid can figure out that there's inflation. Yet all these geniuses at the Fed collecting who knows what in salaries. And the problem is they're looking at all sorts of things that are irrelevant. Why don't they look at gold? Why don't they look at money supply? Why don't they look at what's actually going on with inflation? Don't come up with these esoteric models to try to prove that there's no inflation when all the real anecdotal evidence is that there is inflation. And the Fed is saying, Bernanke is saying that we look at anecdotal evidence. No, they don't. They ignore anecdotal evidence. All they do is look at what they want to see, and if the anecdotal evidence conflicts with their own view, then they throw out the anecdotal evidence and stick to their view that there's no inflation. Anyway, here he's continuing, cut number 3.
So I see the commodity prices as being driven primarily by global supply and demand. Those prices are indeed coming and affecting the overall consumer price index in the United States. My sense, however, is that so long as inflation expectations remain stable and well anchored, which in my view remains the case, and so long as the commodity price increases eventually stabilize, which commodity prices will, I'm confident, eventually stabilize, that this will not be reflected in a extended increase in inflation. I think the increase in inflation will be transitory, that it will pass, and that we'll go back to a level of inflation which is consistent with our price stability mandate.
Well, there was too many clips there. Well, first of all, he says that commodity prices are being driven by supply and demand. The demand is coming from inflation. It's all the money that he's printing. People are using that money to bid up commodity prices. And how does he know it's going to be transient? Anyway, I'm going to finish commenting on that after the break, so don't go away. This is Peter Schiff on SchiffRadio.com.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff. And before the break, we played some sound from Ben Bernanke's speech. And he proves that he doesn't even understand the basics of economics. The most fundamental thing about economics is supply and demand. You have two curves. The supply and demand curve, one upward sloping, one downward sloping, and where they intersect is how prices are determined in a market. And Ben Bernanke points out that prices are rising because of an increase in demand. So he doesn't have to worry about it. Well, what Bernanke doesn't understand is that the demand is coming from the inflation he's creating. The more money that Ben Bernanke creates, the higher the demand. Money supply moves the demand curve. For example, think about an auction where everybody comes up to an auction and they have $10, and that's the most money anybody has. And you auction off items. Let's say you have another auction with the identical items, but everybody has $20 to bid. Wouldn't you expect there to be more demand and therefore higher prices in the auction where everybody brought $20 versus the one where everybody bought 10? What if everybody bought 100? What if everybody brought 1,000? Obviously, the more money at the auction, the more demand for the merchandise, the higher the prices. That's what's going on. And Bernanke doesn't understand, or at least he's not being honest, about how his own policies are affecting demand. And so, in other words, inflation is causing higher demand, which is causing higher commodity prices. So it's not the demand that's causing prices to go up. It's the inflation that's feeding that demand, and that comes from Ben Bernanke. And then Bernanke also said that he's confident that commodity prices are going to stop rising. They've been rising for 10 years. Why should they stop now? And he's been confident that they would stop rising, for 10 years, and he's been wrong. Remember, even before he became Fed chairman, he was worried about deflation in 2002 or 3. It was, deflation is a big threat. Commodity prices kept rising. He's confident that these increases won't spill over into inflation. Confident based on what? Is it just like a hunch he has? Is it just a whim? Is he just going on his gut instincts? Because if he is, maybe he ought to examine how his gut instincts have served him in the past. Like when he said that the problems in the subprime market were contained and they didn't represent a threat to the overall economy. Or when he said there was no housing bubble. Or when he said that even if housing prices fell, it wouldn't have a material impact on employment. I could go on and on about all the things that Ben Bernanke thought that were wrong. In fact, every hunch he ever had has been wrong. Don't you think he should just re-examine his feelings and his forecast? You know, the only way that I think there'd be any chance that inflation wouldn't run out of control, that commodity prices would actually fall, would be if Ben Bernanke thought that commodity prices were going to rise. If Ben Bernanke actually believed that inflation was a threat, maybe, then it wouldn't be, because he is one of the best contrarian indicators of all time. Whatever he says, the opposite will in fact happen. Anyway, let me go back to the phones now and take some calls. First up is Trevor from Chicago. Trevor, you're on with Peter Schiff.
Hey, Peter, how you doing?
Good. How are you?
I'm doing well. I just graduated from law school. I have some question about my law school debt.
Yeah, hey, hold on just 1 second. Let me just make a quick little announcement. As I thought, the precious metals market has shrugged off its morning declines. Gold is now up $10. Silver is up 30 cents. It looks to be at a new 31-year high. Maybe some of the traders were listening to the show and decided to take my advice. But again, this generally tends to be the case. When you get these rate hikes out of China, the initial reaction is to sell the commodities, sell off gold. But anyone who rethinks it will just come in and buy with both hands. And so we're getting new highs. Also, the dollar is selling off. And so the dollar index is now turning down. Many of the commodity currencies, which were flat, are now up quite a bit on the day. And commodities themselves, let me look at the CRB. Well, that's starting to pick up. They're still negative. And the price of oil, crude looks like it's still down. But anyway, go ahead.
Well, I have two types of student loans. One is about $150,000 in fixed low interest rate. The other is $50,000. The interest rate is pegged to the LIBOR index plus a small margin. I'm taking the bar this summer, and then I'll start on a six-figure salary. My wife and I, we were planning on just under-consuming, saving, or not saving, but paying off the debt, just trying to get out of it as quickly as possible.
Well, let me ask you,
I'm thinking
how much debt will you have accumulated by the time you graduate law school?
$200,000.
And does your wife have any debt, student debt?
No, she does not.
So you have $200,000 in debt. How much did you borrow undergrad?
$14,000.
So almost all of your debt is for law school.
That's correct.
And law school is expensive. Now,
yes, it is.
Now you say you're going to get a six-figure salary. I mean, do you know that for a fact? I mean, is it just the minute you get a law degree, you can snap a good job, or or even in this job market?
I've already accepted the job offer, so it's set in stone as of right now.
Yeah. And well, what I would recommend is on student loans, my advice to people was especially large student loans. And obviously one problem with student loans is you can't get rid of them. You can't discharge them, like in bankruptcy or anything. So they're there. So what I would do if I were you is I would consolidate the loans and I would get the payments stretched out as far as possible into the future with the lowest monthly payment you can get. And I think the rates are still subsidized and very, very low. I'm pretty sure they're below 4%.
Yeah, that's correct.
Yeah, so I would stretch that payment out as long into the future as possible, 30, 40 years. Keep the payment as low as possible. And if you do have any money, I wouldn't want to pay it down because I think you can get a much better rate of return investing and keeping that. That's the cheapest money you'll ever see in your life. You'll never see money as cheap as those student loans again. Even if you eventually want to get a mortgage, you won't get a mortgage rate. So that's the cheapest money you'll ever borrow. So I would not be in a rush to pay it off. I would try to lock in the rates. And if I'm right about inflation, eventually those student loan payments are not going to be a burden. I mean, you might be able to make a student loan payment for the same price as a cup of Starbucks coffee. Eventually, you might be mailing in checks where the stamp there's a larger number on the stamp than on your check. So hyperinflation will wipe that debt out. So, yeah, I mean, whether or not you should have accumulated all that debt in the first place is another story. But the fact that you have it, that's what I would do if I were you.
Okay, perfect. Now, one other quick question. Since I'm going to be stretching out my payments with a low monthly payment, I'm going to have some extra money. I'm guessing maybe $2,000 to $3,000 a month. Is that enough to get started in investing in precious metals and dividend-paying stocks? Or
well, absolutely. I mean, absolutely. I mean, there are mutual funds. Unfortunately, I can't talk about my own, but research them. We have them. Other people have them. And yeah, you can buy silver coins. And I think that's a lot smarter than putting all that money into accelerating your student loans. And ultimately, if you do make investments in dividend-paying foreign stocks, at some point in the future, maybe 10 years from now, I don't know, the dividends on those stocks alone might be enough to pay all the interest and principal on your student loans until it goes away. So you might be out from under the obligation because your investments will be making the payments for you.
Okay, perfect.
Yeah.
Well,
just make sure you understand
just
make sure you understand all the risks and read any prospectuses carefully if you look at the mutual funds.
Okay.
Thanks for the call. Next up, and it's amazing, too, how much money people can borrow to go to law school. If we didn't have these student loans, law school would be a lot less expensive. And, maybe there'd be fewer lawyers, which would probably be a good thing. We got way too many lawyers. We shouldn't be spending so much money educating even more. We should be repealing rules and regulations so we don't need all these lawyers, so we can have more people in productive employment. I just read a statistic that we now have twice as many people employed in government as we do in manufacturing, mining, a number of industries combined, which 50 years ago was the other way around. Imagine how much wealthier we would be if all that labor were focused on producing real stuff instead of producing government paperwork and regulation. Anyway, don't go away. We will be right back with more of the Peter Schiff Show on SchiffRadio.com.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff at SchiffRadio.com, and I've got the actual statistics. This is from a Wall Street Journal article yesterday. It notes that 22.5 million Americans are working for the government, the U.S. government. I wonder if that doesn't even count federal and state workers, so I guess the statistics are even worse than I thought. So we got 22.5 million federal employees. We have 11.5 million people combined in the country in the following industries: construction, farming, fishing, forestry, manufacturing, mining, and utilities. Those are really all the goods-producing segments of our economy, and twice as many people are doing nothing working for government as are producing all those things. Now, 50 years ago, it was about the other way around, where you had about 11 million people working for the federal government and 22 million working in those other industries. And if you want to wonder why our standard of living is lower, why we're in so much debt, it's because we're wasting so much of our labor, because all those people who are working for the government are people that can't work in manufacturing or these other industries. And instead of getting the productive output from these industries, we're pushing papers. We're getting regulations. These other government employees are working to undermine our economy. Now, I'm not saying we don't need any government employees. Certainly we do. There is a legitimate amount of work that government employees can do to contribute to our well-being and to a higher standard of living. But we got overkill. Right? Government employees are doing far more harm than good to the economy. Also, I'm looking at an article right now, March Madness, not basketball. Oh, and by the way, the Huskies won, in case you didn't watch that, local team. They did a really good job this year. I've been rooting for them and watching all their games, and so it's great to see the Huskies win. But this article is not about basketball. It's the March Madness in the federal budget. And this article points out that the federal government spent 8.2 times what it collected in taxes for the month of March. 8.2. The government on net collected $128 billion in revenues through taxes in the month of March. It spent $1,528 million in expenditures. Now you might wonder, how could they have spent so much in simply in 1 month? Well, they're counting the money that they spent to retire short-term treasuries that matured during the month of March. Now, of course, the holders of that debt were willing to roll it over, although maybe not, because the Federal Reserve might have bought 70% of that, which has been the case. So that money was reborrowed, but the government nonetheless had to spend it. I mean, what would happen if the Fed wasn't there, if QE2 comes to an end and those bonds mature and the holders don't want their money back because rates are too low? We have to come up with that money or raise interest rates to a level that they'll be willing to stay in the bond market. And where are we going to get it? I mean, this points out, if you're spending 8 times what you're collecting, this is, we are on the edges of an economic abyss, bigger than any in our history, and it is amazing how much complacency there is, and how few people can understand what should be painfully obvious. And given how many people who missed the financial crisis and the bursting of the housing bubble, you think they would be a little bit more circumspect and they would be a little bit more attuned to these problems instead of remaining so oblivious. Anyway, let me go back to the phones. On the line is Stephen in Kansas. Stephen, how you doing?
Peter, thank you for taking my call.
Thank you for calling.
Well, I wanted to comment about Ben Bernanke. I don't believe it is possible that he could be stupid enough to believe the nonsense that comes out of his mouth.
I agree.
More likely.
I agree with you. The man got a 1,600 on his SATs, so it's more likely that he's lying than just being stupid.
Yeah, I think it's his job to serve as the front man for vested interests who benefit from his policies.
Yeah, I think
Washington and Wall Street.
Yeah, a lot of times my feeling is these guys justify their lies because they think they're necessary to maintain confidence in the system, to maintain confidence in the currency. So I think it's basically part of their job. Just like maybe, a lawyer might bend the truth in order to represent a guilty a client. I think this is what Ben Bernanke is doing. He thinks that, he's a cheerleader. He's a guy to try to, keep everything going as long as possible. And so he just goes up there and says good things. He says what he thinks the markets want to hear, and he denies what they don't want to hear. And I think he justifies it by thinking, if I told the truth, like Jack Nicholson, no one can handle the truth, there'd be a complete collapse, and everybody would suffer. And therefore, our prosperity is dependent on me lying in such a convincing way that nobody is afraid, because the only thing that backs the U.S. dollar, it's all confidence. There's nothing real there. There's no real money behind it. And when the confidence goes, the currency goes. And so he's a confidence man, a con man. He has to maintain confidence in an intrinsically worthless piece of paper. And that's another reason why, the government is going after this, what's his name? Neerhoff, the guy who was making gold coins, the Liberty dollars and silver, because the government is afraid. They can't handle competition. They don't want people thinking about alternatives to the dollar. And if anybody proposes one, well, they'll label him a terrorist and put him in jail.
All right. Thanks for taking my call. Thank you for being out there doing what you're doing.
Thank you, and I appreciate your listening. Tell your friends. We got to grow the audience. Next up is Peter calling from Long Island.
Yes, hi, Peter. I got disconnected last week with you. I had a couple of questions. First of all, great show, and I feel sorry for the state of Connecticut for not having you as their senator.
It affects the whole country, because I wasn't running for governor. I was running for senator, so feel sorry for the country.
Oh, I do, and I hope you run again. I hope you give it another shot. But here's my questions. I'm thinking about taking a hit with my 401k, and I have an account with Euro Pacific, and I can't take any more. I already put in what I had to, and I can't touch it because I'll get fined. So the question I had, I may be thinking about taking a hit because I have no good investment vehicles. I have a money market or mutual funds, and I'm afraid if the market does crash like last time, but worse, and with inflation, my money is going to be eaten up, and I might just go in to try to put it in a Roth IRA and take a hit, and have more opportunities in the Roth IRA, more products.
One thing is you might want to look through, first of all, the various mutual fund options that you have and see if any of them and don't just look at the title. You have to actually look at the holdings, because sometimes, one of my brokers was speaking to a client the other day who had a overseas fund that he was happy with, and he said, well, I already have my money overseas. I'm in this fund. The broker looked up the fund, and the top 3 positions in this overseas fund were General Electric, General Motors, and one other U.S. stock, and so he was surprised to learn that's what was in his overseas fund. So you got to be careful. But is there any way for you to roll your money from that plan into an IRA without having to take a tax penalty?
I did that already, and I did that when in the crash 2 years ago into the Euro Pacific fund, and I did pretty good. So, but I can't do any more. I would have to take a loss because I can't touch that money. But I'm afraid of losing.
Well,
I want to be ahead of the game like last time.
Why can't you touch the money?
Well, I can touch it, but I'll get fined. You know,
I mean fined?
I can't. Whatever's in there, it's. I would have to take a hit. You know, pay taxes on it to transfer it over to.
But you're still employed right now?
Yes, that's why.
Yeah, how old are you?
Oh, I'm 50 years old.
Yeah, so, I mean, only thing is you might want, if it's a significant enough sum of money, you might want to discuss with your employer, maybe you can resign, therefore you'd be able to roll it over tax-free into your own IRA, then he could maybe hire you back, or you could work as a consulting. It all depends on how much money is there and what the alternatives are. But, why don't you call and talk to one of the brokers off the air so, that you can have a more detailed conversation. Or talk to your broker who you're working with now.
Peter, I had one more question.
Yeah.
I'm sorry. I have a relative and close, important. It's another 401k question. They're locked into a big company. I won't name the company. Big pharmaceutical company, does business internationally. If something happens in this market, you think that company, the person's funds would be safe, or would be eaten up with inflation, or
it depends on how they're invested. I mean, the market's going to go up or down, or stocks. I don't know what's in their portfolios. I think that if the market crashes, everything is going to be affected. If the dollar crashes, that's a different story. That's the crash that I think is coming, and that's what I want to prepare for, and that's what your friend should prepare for too. But anyway, have them call and talk to one of our brokers off the air, and we'll see if there's something we can do to help them. Just give them the number. Anyway, don't go away, everybody. We got my interview coming up after the break. There's another hour of the Peter Schiff Show ahead, so stay tuned on SchiffRadio.com, the gold standard of talk radio.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on Earth.
The Peter Schiff Show is on.
Call in now. 855-4-SHIFT.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com. And joining me now is my guest from Los Angeles, Bill Whittle, who is a screenwriter, editor, director. He's also the founder of Declaration Entertainment, which is a grassroots group that encourages citizen producers and funds filmmaking about freedom and sacrifice, certainly something that is in short supply in Hollywood, although we do have the Atlas Shrugs movie to look forward to April 15th. He's also a frequent guest on PJTV. But more recently, he produced a very entertaining YouTube video called Eat the Rich, which I watched yesterday. I actually favorited it up on my YouTube site. So if you haven't seen it, make a point of checking it out on either my YouTube site or on the SchiffRadio.com site. Anyway, welcome to the show, Bill.
It's good to be here, Peter. Thanks for inviting me.
Thanks for being on. You know, I noticed when I was favoriting that YouTube video that you had disabled the comments. Was there a particular reason that you did that, and what kind of comments were you seeing?
It is almost always the case where I just leave the comments open, let people talk about what they want to. That's certainly their business. Although I have to say, just in addressing this issue, that people will often tell me that it's their right to comment on my video. They say it's a violation of their free speech if I don't give them a platform to speak to, which is nonsense.
Yeah, absolutely not. I mean, people, that applies to the government. Private citizens can censor anyone they want. You know what I do on my I get a lot of negative comments too on my YouTube video, on my videos, and as long as they don't, I'll delete the ones that use profanity because I don't like that. It's so, and if they're just insulting me as a human being, but if they disagree with what I say and they're making a cogent argument why what I say is wrong, I like that stuff up there because I want discussion of it. But what I don't want is just people making fun of my religion or just saying using profanity.
Well, the reason I changed the status on this one video one time was because I have a friend named Steve Crowder who also produces a lot of these videos, and he gave me a heads up saying that there was a guy out there named The Amazing Atheist who occasionally will do sort of retribution videos, and then he commands his 300,000 subscribers to go over there and use every piece of foul language in the dictionary and just make the whole thing a mockery and a personal insult without even watching the video. Yeah. And I got a heads up from my friend saying he'd seen this happen to other people before and I might want to be aware of it. So I decided, okay, we'll just head this off at the pass. If they don't get a chance to, to spew this stuff, I don't mind them. As you say, I agree with you 100%. If they want to make an intelligent comment that disagrees with the content of the video, that's fine. But this guy has a reputation for just bombing people with obscenity-screaming 13-year-olds who didn't even see it. So I just decided to preempt that.
Yeah, and sometimes people use the comments for promotion. If they see a popular video, they might put a little ad on there to promote something. But anyway, let's talk about the stuff. I thought the video was very well produced and very entertaining, and certainly proves the point that we can't run the government by taxing the rich. That we have to tax. If we're going to raise taxes to be effective, they have to be on the middle class. And nobody wants to acknowledge that because everybody thinks there's a free lunch, and everybody the rich. A rich person is always defined as somebody who makes more money than you do. That's
exactly right. And I should state just once at the beginning that this video is about the only one I've ever done as a co-production with my friend over at a blog called Iowa Hawk. He took a look. It was really simple. The budget for 2011 is pretty close to $3.65 trillion, which is $10 billion a day. So his idea was if you take $10 billion a day as what the government spends, then you can take the amount of spending that they do and turn that into a model. In other words, if you spend $100 billion, that's 10 days, right? So we took a look at what the government wants to spend, and we figured out, well, where will we get the $70 billion for this or the $600 billion for that? But honestly, Peter, the main thing it does is it immediately blows right out of the water this innumeracy that so many in the American population have, this idea that the wealthy have this vast store of money underground in a big cave. They go swimming in their cash like Scrooge McDuck. As a small example, we start this thing by saying that if you took all of the profits from Exxon and Walmart, two hated corporations on the part of the left, took every penny that they make, forget raising taxes, took every penny in profit, it would run the government for 4 days.
Right, but also what people forget, though, is if you did take every penny from those companies, they would shut down and go out of business, and they would fire all their employees, and the government would actually end up losing a lot of revenue because it wouldn't be collecting any taxes from the former Exxon or Walmart employees, and now they would all be on welfare or unemployment compensation.
And this is how we end the video. We spend a fair amount of time showing that if we took all the money from these two corporations, then all of the profits from all the corporations, then all of the money from all of the billionaires, and we list just how much money we would take. The entire point of this is to say at the end of a year, by stealing everything that the rich have, because it is stealing, if you took everything that they had all across the board, you might be able to scrape through 1 year. Then what? Then what? You've got no capital left. You have no businesses left. You've got no investment opportunities left. You've taken everything and you've spent it. And ultimately, Peter, what I hope it does is I hope it shows people that it's not even a question of taxing the rich or the middle class. This level of spending is not sustainable, period.
And also, this whole attitude, because you see it here, this vilification of the rich aren't paying their fair share. Believe me, most rich people are paying a lot more than their fair share because they're paying a lot more because they earn a lot more. But why are they earning more money? Are they stealing it? No, they're earning money because they're creating businesses. They're providing goods and services.
Exactly.
They're providing jobs. I mean, they're doing a lot to earn that money. And society is benefiting from what they're earning. And most of what they're earning, thankfully, they're not spending. They're reinvesting it in growing their businesses, in innovating, in making capital investments, in innovation, or capital depreciates. It has to be maintained. The rich need that money. If you take it from them, then you destroy the economy. You destroy the wealth production. You destroy the job creation.
Now you're on the absolute main vein of the whole argument. And if people understood this, there would be no left. The left looks at wealth as a zero-sum game, that there's a giant pot of gold that was created at the formation of the earth, and that anybody who has more than anybody else took more, and so that means that somebody else has less, that there is only a limited pot of money, and the reason you're rich is because you've taken more than your fair share from somebody else. That's how the left looks at it.
Yeah, and I like, they look at this growing income inequality between the rich and the poor, and the solution is, well, we make the rich poor, we'll take more money from the rich, and that's going to solve the problem. It's not. You're not going to improve the middle class by taking money from the rich. If anything, when you take money from them, they have less money to provide opportunities for the middle class, so everybody suffers.
Well, just on that one point, they often say the rich get richer and the poor get poorer. That's absolutely false. The rich get richer and the poor get richer too. But the point I'm trying to make here is that conservative view is that wealth can in fact be generated out of thin air. You can create wealth out of thin air through creativity, through adding complexity to a system, through free trade. This actually genuinely creates wealth that wasn't there before. So here's how it plays out in the real world. If you take the liberal view of things, that there's a limited pot of gold and that the rich have more because others have less, then businessmen are bad guys. They're villains. They stole it from other people. But if wealth can be created out of thin air, then businessmen are heroes because they produced wealth that wasn't there before. And the wealth that they keep to themselves is only a tiny fraction of the total wealth they've generated that gets paid out in salaries, gets paid out in investments.
Absolutely. If you think of the money that maybe Thomas Edison made for his inventions, compare that to the benefits to society of what he produced and what he invented, and that's true for a Thomas Ford or Stephen Jobs or a Bill Gates. They made a lot of money, but society benefited many, many times over. And think of all the people that work for these companies, how much money collectively they've all earned. Much more than the founders. But anyway, don't go away. We'll continue this discussion after the break. You're listening to The Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff speaking with my guest, Bill Whittle. First, real quick, the gold and silver rally has kicked into another gear. Gold's now up better than $16. Silver's now up over 50 cents. Oil has now completely recouped its losses and gone positive as well. Bill, one of the problems, I think, with the taxing the rich is that, people don't understand the incentives and the way taxes change incentives. And as you tax rich people more and more, they have less incentive to work and more incentive to just enjoy their wealth in retirement and maybe sell their company and lay off a bunch of workers and just live the easy life. And number two, I think a lot of people don't even appreciate. I talk about how I pay about 45% of my total income in taxes right now when you count the federal income tax, the state income tax, and the 3% Medicare tax. So that's basically 45% of my income that is taxed, not counting what I pay in sales taxes or property taxes or Social Security taxes, just those three. And if they were to, and if you allow the the Bush tax cuts to expire in a couple years, and we get the higher income taxes here in Connecticut, my marginal tax bracket will be over 50%. It'll be closer to 55%. What's my incentive to work for 45 cents on the dollar? And
zero.
And a lot of people think, oh, the rich don't pay any taxes because there's this high-profile people, who pay very little in taxes because all their income comes from dividends. But, of course, the corporation paid the tax before it was dividend out to them. So they paid the tax indirectly through their corporation. But on an individual basis, they didn't necessarily pay it. But there are a lot of people like me who are self-employed or run small businesses who are getting destroyed by taxes. And people would be shocked if they knew exactly what percentage of our income we pay. And to think about that, a medieval serf, what defined serfdom was turning over 25% of what you produced to the Lord. And that made you a serf. Well, what's an American who's turning over half of what he produces to the Lord of the United States?
He's a citizen serf. Yeah, no, you've hit it right on the head. There's so much there that you just talked about that bears merit. But the two things I would point out is, number one, there is no incentive for a wealthy person to stay, open a new business, start a new plant, any of that stuff. And so, yes, they're shutting down. They don't seem to be. It's a death spiral, isn't it? I mean, you end up raising taxes on people. People opt out of the system. They produce less. The government, rather than scaling back its spending, decides it wants to raise taxes even higher to make up for the lost revenue, which means even more people get out of the game, and you're done.
Yeah, and another big...
And they'll take their money and go overseas. I mean, why wouldn't they? The people who get hurt the most by high taxes are the poor, because rich people have the means to get out of this situation.
The politicians are calling the businesses that are going overseas traitors and Benedict Arnolds. This country was founded by people who didn't want to pay high taxes, and the taxes are much higher. If the founding fathers who revolted in the American Revolution knew the type of taxation that awaited us, they would have stayed with the English. And so to call people to call people who don't want to pay these levels of taxes, and the problem, the inheritance tax, a lot of businesses now, since they know the inheritance tax would decimate their business, instead of preserving it and passing it on to future generations and teaching their kids how to run these businesses, they end up liquidating them, getting rid of their employees. The assets move overseas because they have to sell it in their lifetime because they know if they die, the business is going to get ruined by the estate tax.
You mentioned Atlas Shrugged earlier, just before I came in, and isn't that basically the entire theme of that book? That businessmen get tired of being treated not just as taxpayers, but as host organisms, because that's really the only word for what they're doing to us. They're turning us into host organisms, and we get bled white by these people, and they expect more and more and more, and they provide less and less and less for it. And finally comes a point where you realize, and I think the whole country is realizing this, that these people in Washington have an addiction that they cannot break. If you put enough cocaine in front of a cocaine addict, he won't suddenly just say, hey, you know what? I've had enough cocaine for today. I believe I'll go and do some exercise. He will snort every single gram of it. And these people will not stop spending until there's nothing left for them to spend.
Yeah,
I think more and more Americans are realizing that, well, that's the answer then. We have to cut off their food supply. We have to cut off their drug habit by saying, we are simply not going to pay it.
Yeah, everybody wants jobs, but people don't appreciate how difficult it is to be an employer, how hard it is to deal with all the rules and regulations and taxes. Yet what do we want to do? We want to try to take more taxes from the employers, and then we wonder why the jobs are disappearing. It is hard work. Not everybody is cut out for it. Thankfully, there are some people who can do it. There are people who can be entrepreneurs, who can take the risks, who can manage a business, who can manage a payroll, and thank God they're here. Otherwise, we'd all be self-employed, and then where would we be? There'd be no job. Didn't
the socialist in chief just a month or two ago give some speech saying that corporations have to be responsible and share their profits with their workers? Well, first of all, they do share their profits with their workers. It's called a salary. And secondly, what he's really talking about is, well, gee, if a company does really well, then they should pay employees extra. To which I say, okay, fair enough. But that also means that if the company's having a bad quarter, your wages will go down. And if the company's in real trouble, we're going to expect you to come in and work for free, like the boss does, until we get this thing back on the feet. And you say that to people, and they go, whoa!
Of course. And, if employees want, if it's a publicly traded company, let them buy stock. Let them take risks everybody else. And, yes, people forget that, and I employ, like 125 people, and one of the things I know is that I've got to pay my employees every 2 weeks. I have to write those checks, whether I made any money or not. They know
the ultimate thing.
They know that they've got a check, right? They know that they've got a check. I don't. And if there's losses, I've got to come out of pocket to feed that business, to keep it going. And most people don't want that uncertainty. They can't live with it. Most people can't even take a commission job. They need a dependable salary. And the only way you can get one is to have an entrepreneur who is willing to commit to that and run a business. And he's not going to do it if he can't make a lot of money, because it's not doing it for charity. He's doing it for himself. The fact that he helps other people, well, that's the Adam Smith invisible hand. That's why capitalism is so great, that the capitalist benefits everybody, even though his only motivation is to benefit himself.
Correct. Of all the slanders leveled against the rich, this idea that they're lazy, that they don't work, is the worst. I've known a few millionaires in my life, and I've watched how they got their money because they started from nothing. And despite this propaganda about rich people just being lazy and sitting on their piles of money, my experience has been is that the business owner is the first guy in, he's the last guy out, and he is the guy who is spending his weekends, nights, and vacation time sweating bullets trying to figure out how to make payroll. And watching what they did in Wisconsin, which is kind of the impetus for this video, this Eat the Rich video, where Michael Moore says, there's tons of money in this country, it's just not in your hands. You know, he's basically ginning up class warfare to go out and take what's rightfully theirs.
Well, they should start by taking his money, because he's got a pretty big pile.
$20 million or something just from Fahrenheit 9/11 or whatever it was, and then he goes back and sues Miramax because he didn't think they gave him enough. Yeah. It's always about other people.
Yeah, he's the ultimate in hypocrisy. But anyway, thank you for coming on my show. I appreciate it. Keep up the good work. Don't forget, everybody, watch the video "Eat the Rich" on YouTube. Anyway, don't go away. We have another half hour of the show coming up. I'll be taking your calls on SchiffRadio.com.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff at SchiffRadio.com. You know, the British pound is strong today. It almost cost $1.62 to buy a pound. And, you know, the British are choosing austerity over stimulus, although I don't think their policies are anywhere near as austere as they should be, but at least they're not stimulating. And the market seems to be voting with their money, and they're betting on the pound rather than the dollar. So that should show you who's got it right and who has got it wrong. You know, one of the things that is the problem with this vilification of the rich, and we were discussing that before the break, is that there are some examples of rich people who are being enriched by the actions of the government. I mean, there are a lot of subsidies that unduly favor politically connected people who are wealthy, and that gives the wealthy people a bad name who earn their money honestly without access to government subsidies. Also, the Wall Street bailouts, the TARP, the stimulus, the quantitative easing, all of this benefits a certain segment of very wealthy, highly leveraged financiers and bankers, all at the expense of average working Americans, of retirees, of savers. And again, this attitude, these high-profile attitude, gives the rich a bad name. And it's very unfortunate that, you know, because this represents a very small slice of the hardworking American entrepreneurs who create the jobs, who provide the services, who produce the products that we all consume every day, and the jobs that we need to afford them. And so that's another reason that we have to move away from this policy, because it drives this rhetoric, it drives the socialist or the mob culture, because people are being impoverished by what the government is doing. They see the examples of this affluence, and they get angry. And they're in a mood for revolt. They're in the mood to vilify the rich and take their money. And this is being fed by these socialist policies from Washington and from the Federal Reserve. And so if we had sound money, if we had real capitalism, then the middle class and the poor would enjoy the benefits of capitalism more and would be less willing and less likely to try to vilify the rich. Anyway, a quick announcement. Oh, first, you know, we don't have a lot of people on hold right now. If you want to call up, it's 855-4-SCHIFF, 855-4SCHIFF if you want to ask a question or make a comment. Also, I was just informed that my appearance today that I promoted earlier on Freedom Watch has now been canceled. That's, I think, the third Freedom Watch appearance I've had canceled in a row. Hopefully this is not an ongoing trend. They're saying that they want to wait for the judge so I can be on with the judge as opposed to Christine O'Donnell. I don't know. I obviously could have done both, but they're going to try to reschedule maybe this week or next. I don't have a lot of availability, though, next week because I'm in San Francisco most of the time. And so we'll see if I'm on. If I'm on again this week or next, I will let you know. Meanwhile, let me start taking some calls. Paul is on hold from Orange County, California.
Hi, Peter. I wanted to ask you: are there any plans, HR divisions for companies to pay people in other currencies if the dollar does go to a significantly weaker level?
Well, not that I know of. I mean, I don't know any companies that have announced that kind of a plan, but of course they would have to earn their revenue. I mean, the companies can only pay out what they're earning, so they're earning dollars. They're going to pay dollars. I think the only, although some companies are multinational and they're earning foreign currencies. In fact, I've talked to people like, I'm friendly with quite a few people over at Fox. And, Fox is basically the parent company is Australia, News Corp. But I said, look, why can't you guys should negotiate your contracts in Australian dollars? Right. Especially when these guys sign 3- and 4-year contracts and they're locked into a particular price. Why lock yourself in dollars? Lock yourself in Australian dollars. I mean, they got plenty of Aussie dollars. They can pay you. And what happens, too, is when people are overseas sometimes, when they're working for an overseas company and they're getting paid in dollars and they're immediately impacted every time the dollar loses value, they have to spend more money locally. So if you're certainly living abroad, it makes a lot of sense to ask your employer to pay you in the local currency. Don't pay you in the dollar. I mean, maybe if that local country, if the currency is even worse than the dollar, then there's not that many that are. But maybe if that was the case, depending on where you're working. But the only entities that seem to be coming up with these contingencies are the state governments that are looking to introduce, legal tender laws with gold and silver. Or some states are contemplating maybe even making some gold and silver coins that people can use, because obviously constitutionally states certainly have that ability. Although now the federal government, if the state were to do that, the federal government might hold the state as if the state were a bunch of terrorists. Maybe they'll start arresting the state government employees because, after all, they're trying to undermine the U.S. monetary system when they're not. The U.S. monetary system has already been undermined. It's undermined by the Fed. It's undermined by Congress. There's no value there. There's nothing to undermine. As I said earlier, it's all about confidence. Now, maybe, yes, the government doesn't want the confidence to be gone. People, they want to maintain the myth that the money is sound, and anybody that threatens that myth, by saying the emperor has no clothes, they want everybody to think the emperor is naked. And if you're out there saying the emperor has clothes, they want to shut you up, or has no clothes. They want to shut you up because maybe you'll convince somebody, and they'll see the emperor for what he is and acknowledge it, and then, it all hell breaks loose.
Right. And then, so I work for an international company. We get paid in Canadian, Australian, all over the world. I tried to ask, hey, can I get swapped out? And they said, well, we'd have to fire you and then possibly rehire you into our other divisions. And one thing leads to another, and, well, there goes my purchasing power because I'm overseas collecting dollars.
Yeah. Yeah, as I said, if you have a choice, go for the local currency. And eventually one day, look, if the dollar starts losing value fast enough, people aren't going to want to work for them. Because what's the point? Right. What's the point of going to work? Right. And so companies might have to find alternatives if they want to keep good people. But the question is, will the government take some action to prevent that legally?
Sounds like a business opportunity to me, but,
Thanks. Thanks for your call. It's funny. I've got some clip here from Hardball. This was Chris Matthews. And, it's funny. This is a reaction to a proposal by the Republicans in Congress to try to cap government spending legally as a percentage of GDP. They want to cap it at 18% and require a 2/3 vote to raise taxes. And this, I guess, is a rant. I think is it Paul Ryan? I forget who's behind it, but The interesting thing is the Democrats are constantly criticizing the Republicans for bringing up the Constitution. Yet, based on what do they want to oppose this type of mandate? Well, they want to evoke the Constitution and call it unconstitutional. Let's take a listen. It's cut number 5.
This is such a stringent amendment that Paul Ryan's roadmap would be unconstitutional under it. Every year of Ronald Reagan's presidency would be unconstitutional under it. This isn't just something that can't be done. It's something that every time Republicans actually sit down and write a plan about how you would actually run governmental fiscal policy, they realize it also shouldn't be done. So they're not going to try to pass it, but it allows them to look like they're on the side of balanced budgets while Democrats aren't. It's all messaging, but it's really bad economic policy.
I think I misunderstood. So it wasn't that he was saying that the amendment, I guess this is a constitutional amendment, and so that wouldn't be unconstitutional, but they think that all this big spending would, of course, be unconstitutional if there was a constitutional mandate. But, I actually don't think, even if we could pass this, that it would work, because now you have to define what GNP is. And the government calculates it. They can decide what to include and what not to include. So it would be very difficult to use such an arbitrary measure. The best thing would just be to not allow the government to borrow money. And if the government wouldn't borrow money, they would have to cut spending because the public would not stand for the higher taxes that would be necessary. So the best way to bring this about is through or not even balanced budget. Just don't raise the debt ceiling. And, of course, if we go back to sound money, if we go back to a gold standard, there are a lot of ways to force the government to spend less. In fact, we can enforce the Constitution. We can get rid of the income tax. We can force the government to apportion direct taxes, which is what they're supposed to do, which makes it very hard for the government to collect direct taxes. The Constitution in its original form, which we ignore, keeps government small. We don't need to change it. We just need to enforce it.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. It's Peter Schiff, the last segment of SchiffRadio.com. And I have just been informed that my Fox Business Freedom Watch segment has been rescheduled for this Thursday. The judge will be back, so it'll be the judge and I. So unless they cancel it again, I will be on Thursday, 8 o'clock Eastern Time. And again, 11 o'clock Eastern Time, they rerun the show. I'm looking at a chart of the bond market. Actually, no, that's the wrong chart. That's the gold market. No wonder it looks so good. I just pulled it up, and but interest rates seem to be backing up quite a bit today. It's a little bit of a breakout. I'm drawing a trend line. It's a chart of the yields I was looking at, which is kind of why it looked a little bit like gold in that it was upward sloping. But we're getting a bit of a backup in interest rates today. That obviously shows that inflation is starting to weigh on the bond market as well as supply concerns. Anyway, we got to go back to the phones. I got a couple people on hold. First up, John in New York City. John, you're on with Peter Schiff.
Yeah, hey, Peter. I'm 32 years old. I have a Euro-Pacific account, but I'm curious to get your thoughts on what I should be doing with money that's, for whatever reason, let's just say that I can't, put everything into one account or the other, and I had to invest in the U.S. stock market, whether it's through my company 401k plan and things like that. What should I be doing with that money? What, should I just be going into, precious metal ETFs, or do you have any suggestions on kind of how I should approach that if I had to invest here locally in the U.S. dollar?
Yeah, well, if you're investing in precious metals ETFs, you're getting out of the dollar by definition. So you can certainly do that. But if you were going to own U.S. stocks, and I own some U.S. stocks myself, and I'm even thinking about coming out with a U.S.-based fund, which, again, I can't talk about, but it might happen. But my strategy would be that if you're going to invest in the U.S., avoid all the companies that are generating revenues domestically from the U.S. consumer or that have loaned money to U.S. consumers. That would include financials, the banks, retailers, home builders, any company that is dependent on the strength of the U.S. economy, you want to avoid. You want to invest in the companies that are benefiting from global economic growth. So that would be the multinationals, exporters, companies that have pricing power, companies that own a lot of natural resources and raw materials, so that if these prices go up, that directly benefits their bottom line. So, look at the market from that perspective. And I think a lot of those quality U.S. companies, as the dollar tanks, they will be takeover targets. Whether the U.S. government allows foreign companies to snap up some of our premier Fortune 500 companies remains to be seen. But those are the type of companies that foreigners are going to want to buy. Companies with good international brands, good overseas assets. If they can buy them on the cheap, they will do it. And as the dollar goes down, our whole country goes on sale. And so those are the types of U.S. assets I would look at.
Okay, appreciate it. Thank you.
Thank you. And, of course, it's not a benefit for Americans that the U.S. is on sale. It allows foreigners to snap those assets out from under our feet. I mean, I remember a couple years ago when the Canadian dollar was moving to its highest level. It was, I think about $1.15, $1.17. I keep my boat here in Connecticut, and the guy next to me had sold, not directly next to me, but on my same dock, the same walk where my slip was, a guy had sold his slip. And I was speaking to the people who bought it. And they were Canadian, and they had come down from Canada specifically to buy that boat, right? Because it was cheaper than buying a boat up in Canada based on the exchange rate. So they saw the ad, and they came down. Now, if it weren't for that, an American probably would have bought that boat at a lower price. But because of the weakness of the U.S. dollar, the current owner of the boat had the ability to sell that boat to a Canadian. And so, therefore, an American who would have otherwise had a boat now goes without a boat because he can't afford to compete with the Canadian. And that's going to happen more and more as our money loses value. All the things that we want are going to become too expensive, and other people are going to buy them instead. Because right now, a lot of things that we're buying, other people can't buy because they're too expensive. That all is going to change. When the dollar goes down, things become more expensive for us, and they become less expensive for everybody else. Now, if you happen to have foreign currencies, well, then you're in the same position as foreigners who are gaining wealth as the dollar falls. But if you're foolish enough to go down with this ship, then you lose your wealth along with all the other Americans who are oblivious to what's going on. Anyway, still got some lines open, 855-4SCHIFF if you want to be the last caller on the show. The next caller is Tony in Queens, New York. Tony, you're on with Peter Schiff.
Hello, Peter. Can you hear me?
Loud and clear.
All right. Then I have a twofold question. My first question is, now when a bubble bursts, where does the money actually go? Like in housing, all the prices went up. Now, when the bubble bursts, all that money that was put into those houses, where does that money actually go? And the same thing pretty much with the stock market.
Well, the money to build the houses went into the construction. I mean, it's expensive to buy the materials and things like that. Now, houses that were already built, if somebody sold that house, then the money that was paid for it went to the seller. But a lot of the money in a bubble never existed in the first place. It was simply a function of assets going up in value. So the money was an illusion. And what happens when the bubble bursts is the illusion disappears. The money goes to money heaven. It doesn't go anywhere because it never existed in the